Good evening, everyone. Thank you for participating in Voltas 4Q FY18 post-results conference call. We have senior management of Voltas today with us, represented by Mr. Anil George, Deputy Managing Director, Mr. Abhijit Gajendra Gadkar, Chief Financial Officer, Mr. Utsav Shah, Head Corporate Finance, and Ms. Asavari Sathe, Senior Manager Corporate Communications and Investor Relations. We will start with the management commentary first, followed by question and answer session. Over to you, sir.
Good evening, everybody. Analysis of results, quarter and full year ended 31st March 2018. There appears to be a sense of greater optimism across many parts of the world. According to a latest IMF report, global growth is expected to rise 3.7% in 2018. Growth drivers include a notable rebound in global trade, an investment recovery in advanced economies, continued strong growth in Asia, a sizable upswing in emerging Europe, and signs of recovery in several commodity exporters. This supported by strong momentum, favorable market sentiment, accommodative financial conditions, and the domestic and international repercussions of expansionary fiscal policy in the United States will support and push the recovery. However, the headwinds of a possible escalation of a trade war between US and China loom large, and the Korean crisis continues to remain. On the back of America's sanctions on Iran and OPEC moves, oil prices have been steadily climbing up. The threat of inflationary pressures in the US economy remains. India has been recording the highest growth rate amongst the emerging economies of BRICS. Retail inflation at 4.6% for April was marginally higher than the previous month. The government is committed to addressing deterrents and roadblocks to growth with progressive policy reforms such as the implementation of the GST, the Insolvency and Bankruptcy Code, recapitalization package to improve the financial health of public sector banks, schemes targeted at power for all, and so on. As a result of these measures, the economy is showing signs of growth, although the inflationary impact of factors such as the recent increases in oil prices, depreciation of the Indian currency needs to be watched. During the year, Voltas achieved a total income of Rs 6602 crores, income from operations of Rs 6380 crores, and profit after tax of Rs 578 crores. In view of the stronger performance, the earnings per share, face value per share of Rupee 1, as at March 31, 2018, improved to Rs 17.30 as compared to Rs 15.64 last year. The Board of Directors have recommended a higher dividend of Rs 4 per share, that is 400%, as against 350% in 2016-17. Analysis by segment. Segment A, Electromechanical Projects and Services. Segment revenue for the year was higher at Rs 2845 crores as compared to Rs 2655 crores in the corresponding period last year, a growth of 7%. Segment results improved to Rs 185 crores as compared to Rs 85 crores last year, reflecting better quality orders and effective execution both in domestic and international business. The segment margins for full year are now at 7%, underlining the improved trajectory over the past several quarters. Carry-forward order book of the segment stood higher at Rs 5062 crores as compared to Rs 4321 crores last year, a growth of 17%. New orders booked during the current quarter were Rs 616 crores for domestic and Rs 614 crores for international business. International operations. Our focus on effective execution of ongoing projects, together with settlement and financial closure of older completed projects, continues. These initiatives have helped improve operations. At the same time, we are conscious of the continued embargo in Qatar and are selective in booking orders in the region. We have earlier spoken on the Carolean PLC UK contractors filing for compulsory liquidation in January 2018. The company branch in UAE and its joint venture company in Oman are currently executing MEP projects as a subcontractor, wherein Carolean PLC is a joint venture partner of the main contractor. Project certifications are picking up and receivables are being liquidated as we continue to make progress on these projects. Broad-based pickup in economic growth is expected across Gulf Cooperation Council or the GCC countries in 2018. The recent sanctions announced by the United States on Iran and the cut on the oil production by the OPEC has also helped in driving up the oil price. Going forward, we propose to continue our approach of building our order book in a risk-mitigated manner. We have recently backed a contract connected with developments linked to Expo 2020. The total carry-forward order book of international projects stands at rupees 2004 crores, of growth of 14% year-on-year, offering the required forward visibility. Domestic projects. The decision to focus more on government projects or externally funded investments has helped the domestic projects business to remain sufficiently protected against the impact of low investment and myriad liquidity issues faced by the private sector. With the government pushing the growth agenda, opportunities are increasing in electrical distribution, water treatment, and smart city development. Besides, the division's core area of HVAC projects has benefited with projects in large buildings and in tunnel ventilation for metro transportation. Meanwhile, we continue to pursue various internal efficiency improvement initiatives which augur well for maintaining the margins. Our subsidiary RIEL has registered a full year profit in 2017-18 through efficient execution of rural electrification projects. The current year saw an order booking of rupees 2149 crores. The domestic order book now stands improved at rupees 3058 crores, a growth of 20% year-on-year as of 31st March 2018 and provides a stronger base. Segment B, Engineering Products and Services. Segment revenue and results were rupees 310 crores and rupees 99 crores as compared to rupees 332 crores and rupees 96 crores respectively in the corresponding period last year. Impact of demonetization and GST implementation has been extra severe on the domestic textile industry, leading to further slowdown in new capacity formation. Profitability of spinning mills was also under pressure during the year due to subdued prices for yarn and a steep increase in raw cotton prices. Banks are reticent to lend to the textile sector. Despite these conditions, the division focused on providing value-added services and delivered profits. In mining and construction equipment, Mozambique operations continue to drive the performance. On the domestic front, the year was challenging with slowdown in mining-related activity. However, a gradual recovery appears to be on the horizon and the company has reprioritized the India business. The government impetus on road development has been encouraging and we are beginning to see orders in the crushing and screening equipment sector. Segment C, Unitary Cooling Products. Despite intense competition and aggressive pricing, Voltas continued to improve to its number one position in the unitary cooling products business with a YTD market share of 22.1% at multi-brand outlets. Voltas recorded a 14.5% secondary sales growth for the year, while industry grew at 11%. Voltas has been able to close the year with a turnover of around rupees 3225 crores. The segment results have also been higher at rupees 475 crores as compared to rupees 440 crores last year. Our strategy of continued focus on both inverters, fixed-speed split ACs as well as window ACs has enabled us to address customer needs for different products. In particular, we are seeing a growth in inverter AC demand from Q3 onwards. Our product range in inverter ACs has been significantly enhanced to cater to this industry shift. Voltas fresh air coolers sold approximately 207,000 units, a growth of around 38%. We are improving our market penetration through an expanded product range, a good value proposition supported by better features, competitive pricing, and deeper distribution network. Commercial refrigeration business too grew with an enhanced portfolio of new products such as combo coolers, chest freezer cum cooler, and varying capacities for existing categories in response to evolving customer needs. The Voltbek joint venture. As you all are aware, the company has entered into a joint venture agreement with a leading European home appliance company, Arçelik AS, to form an equal partnership for entering the wider consumer durables market in India. The entity will launch refrigerators, washing machines, microwaves, and other white goods or domestic appliances in a phased manner under the brand name of Voltas Beko. We are on schedule for the proposed launch that is expected in H2 of calendar year 2018. This provides the company an opportunity to expand the established Voltas brand and tap into India's growing consumer durables market. In line with the government's Make in India initiative, manufacturing facilities are being set up in Gujarat, leveraging the technological excellence and global capabilities of our joint venture partner. To sum up, we remain reasonably confident about the longer-term future, not forgetting that the nature of our industry is substantially dependent on the weather. In the immediate term, unseasonal showers across some parts of the country in the peak summer months of April and May have dampened the industry spirit. However, it is too early to predict the impact of this on the entire year's sales. In the project space, we will focus on building a larger order book, albeit continuing our practice of intensive risk assessment. Needless to state, the strength of our balance sheet and the availability of cash surplus and a ROC exceeding 20% remains an advantage as we look at opportunities for growth. We now move towards the Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Also, as a reminder, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. If you have any further questions, you may come back for a follow-up. The first question is from the line of Venugopal from Bernstein. Please go ahead.
Hi, thanks for the opportunity. My first question is on cooling products. Just wanted to understand that what would be the like-to-like sales growth for this quarter, and would it be fair to say that the pre-buy, given that you had a very strong Q3, would have also led to some impact in this quarter?
Sorry, I didn't get your question. Can you repeat it? I think there was some scratchy on the line.
Yeah, just to understand on the cooling product business, what will be the comparable sales adjusted for any taxes, etc., on a YY basis for this quarter? And would it be fair to say that there would have been some pre-buy impact in this quarter sales?
Sorry, can you speak a little slowly? I think as you speak into the...
Is it better now?
Yes, it is much better now. Much better now, yeah.
Okay. So, on cooling products, just wanted to know how do we look at comparable sales on a YOY basis for this quarter, adjusting for, all the tax changes that have happened. And my question within that is to also understand would there have been an impact of pre-buy in this quarter?
There has been an impact of pre-buy primarily in quarter 3. As you are aware that we had a new set of energy efficiency norms.
Excuse me, this is the operator. Sir, may we request you to come a bit closer to the microphone, please?
Sure. I think we had some pre-buying in quarter 3 of this year. Because as you know that we had a new set of energy efficiency norms which were introduced, which brought the energy efficiency norm for fixed speed split air conditioners on par with the energy efficiency norm for inverter ACs. So there was a pre-buying which we had talked about in our last investor call primarily in quarter 3. So in quarter 4 we are not seeing pre-buying. Our typical experience of primary sales in quarter 4 is that these are sales in anticipation of the oncoming or the incoming summer season, and which is what drives the sale.
Sir, actually, I think just to clarify on my question, I'm aware of the pre-buy impact which was in Q3, so I'm aware that Q3 was fairly large on account of a pre-buy. Just wanted to know that in Q4, when we look at reported sales numbers on a YY basis, it looks flattish. So just wanted to understand the drivers for this flattish growth. And more importantly, would there be a comparable number to look at YOY given that there have been some tax changes, etc., post GST?
See, I think just to clarify, the YOY comparison would not be fair because the previous year numbers and were inclusive of taxes, whereas the current year number post GST implementation are exclusive of taxes. So they are not strictly comparable.
Yes, sir. So just if you could quantify the number as to what would have been the growth in this quarter, just from our perspective, would it have been a 10% growth on a comparable perspective? Is there a way to calculate the numbers? So what would have been the growth on a comparable basis if you were to adjust? Was it a 10% growth quarter, 12%, or?
See, another challenge is that what you are actually talking about, what we are giving the reported numbers is the primary sales.
Yeah, so I just wanted to know the primary sales like to like.
Yes, so the
primary sales, the growth has gone up by how much in the fourth quarter?
The primary, the growth in the primary sales on a YOY basis would be around 6 to 7%.
Okay, yeah, this is what I wanted to know actually. And secondly, wanted to know, given the season issues that, were faced for a few days in April and May, from a growth point of view, from a summer season perspective, are we now getting back into a faster growth than the 6 to 7% we have delivered in Q4 on a like-to-like basis for primary?
Well, I think it is too early to predict what will happen in the whole onset of summer. As you know, in India, for example, the largest market for air conditioners is North India. And the summer season in North India is typically, we still have another 1.5 months of summers there. Because typically the monsoon sets in towards the end of May, early June from the southern part of India. So So it is still very early to predict how the entire year will pan out or how the summer will pan out. But you are right that the month of April have been pretty sluggish.
And sir, in terms of margins, what has been the key driver for the expansion in the EC business? And is that sustainable?
So basically the sustainable margins, as we have always maintained, is about 11 to 12%. Now, although the sustainable margins are 11 to 12%, we have probably delivered slightly better than those margins, and there are multiple reasons for that, which includes procurement, distribution, logistics, marketing spend.
See, if I might just add, it is incorrect to look at the margins of a business from a quarter to quarter. As Utsav has just pointed out, the margin for any quarter is an offshoot of the volume, which generates a certain amount of gross margin, offset by marketing spends, etc. So there is a kind of an absorption that takes place. So you should not look at a high volume quarter really to gauge whether the margins have improved or not. On an annual basis, in the UPVG business, we have secured about 14% margin. Yeah. And this margin gives us a certain amount of security going forward in terms of tackling competition, in terms of making additional market investments to protect our brand. That is what I would say.
Sure, sir. Thanks a lot. I'll queue back in for other questions. Thanks.
Thank you.
Thank you. The next question is from the line of Aditya Bhartiya from Investec. Please go ahead.
Hi, good evening, sir.
Good evening.
So what proportion of industry sales this season would have been inverter? And how is the proportion of inverter for Voltas?
We have had a gradual increase in our inverter sales, as we have said in the analyst call. For the entire year, we have had about 20% of our sale coming from inverters. But this proportion is much more skewed towards sales in Q4 particularly, where it has...
It is edging, and if you look at the industry as a whole, Aditya, it is edging closer to 40% plus in terms of the change over to inverter. So it would be right to say that the trend towards inverterization is catching up much faster than what has been generally anticipated by the industry. So the question then moves into what are we doing? In our forward planning for the summer as well as for the year ahead, we are planning for much higher numbers on inverters. At the same time, not forgetting the fact that there is a market that is available for the fixed-speed air conditioners. And the price differential between the fixed-speed air conditioners and the inverters currently is of the range of something like about 3,500 and odd, which is sufficient to actually push the sales of the fixed-speed inverters while fixed-speed machines, while also ensuring that the inverters are going ahead in a strong manner.
Mm-hmm. Sure. And so, how's the competitive intensity different between inverter segment and fixed-speed segment? And if you could also indicate whether margins in the inverter segment are typically lower or higher as far as the current intensity is concerned.
No, so I don't think that we'll be able to tell you the margins in each of our particular product categories. That information would not be easily shared. So that was in response to your second question. I think your first question, if you could please repeat.
How is competitive intensity different between fixed-speed segment and the inverter segment?
I would say that the competitive intensity is probably high in both the segments. If you see the current trend of advertising that most of the competition is doing, it has been a lot of it has been focused on inverter ACs. And most of our competition have offerings both in inverter AC as well as in fixed-speed AC, barring one competitor who has taken a conscious call to move out of fixed-speed AC.
Sure. And so one last question on the EMP segment. By when do you expect HVAC orders in respect of metro trains to start getting awarded in a big way? And how do you see the outlook for rural electrification and water sectors? Thanks.
Well, to answer your second question on rural electrification, we are seeing a number of orders, as we have also said in our analyst write-up, that our subsidiary RIL, which executes many of these contracts, has turned profitable during the year. So we are seeing a number of projects being awarded in rural electrification. We have been selective in some of the states in which we have chosen to bid and work on these projects. So there are a number of projects being awarded at this time. And some of these projects are also backed by either central government grants or by institutional or foreign institutional support. On metro rail, we see some projects being awarded in some of the cities of the country. For example, there were projects awarded in the city of Calcutta in the last quarter and in some other cities. In Mumbai Metro, unfortunately, these projects are not yet awarded for the MEP portion of the contract.
Sure. Thank you so much, sir.
Thank you. The next question is from the line of Abhishek Puri from Deutsche Bank. Please go ahead.
Thank you for the opportunity. Good evening, gentlemen. So first on the inverter AC segment, just wanted to understand for the Q4 specifically, since the energy efficiency norms have changed after that. So in Q4, how has been the market share for Voltas specifically, and in terms of the overall sales, what has been the number? I think you've just given for the full year right now. And secondly, on the AC market share, you've mentioned 22.1% for the full year. If I recall correctly, for the last 3 quarters, your market share was well above 22%. So has there been a decline in Q4?
No, the market share that we are reporting from quarter to quarter can change a little up by a few basis basis points up or down. And if you recall, in the first quarter, the market share was something like about 19.7 or something like that, if I remember right. So we have actually worked our margins up to 22.1 because at the end of the year in March, we actually totaled up the whole thing and look at it, and then we've got a 22.1 for the full year as per an external agencies, reputed external agencies, assessment of secondary sales.
So for Q4, what was the number?
Q4 is in and around the same number.
Yeah, I think that would be the right thing.
Okay, and second question is on Voltas Pecco JV. Since you have guided for second half launch, when do we get to see the marketing efforts and the launch? So basically, when will the launch expenses be, booked into the numbers? Would it be this quarter? Because I think Arçelik has guided for some 30 million euro revenues this year.
Yes, but I think I would answer it this way: the launch, the advertising, etc. for the launch would happen around the time that the products are getting launched. So that would be part of the entire advertising and sales plan, which will be worked out and which is being worked out right now.
So is it June or is it September now?
Some part of because you have festivals falling in different parts of the country at different times, we will coordinate it in a manner that we are able to pick up the advantage of those festival-oriented sales. So that's all that we would like to really say at this particular point of time, rather than, really say that this is what we're doing, etc. And, get competition to be, throwing money around, advertising around that time.
Okay, got it. I'll join back in the queue, sir. All the very best.
Thank you. The next question is from the line of Manish Poddar from Renaissance Investments. Please go ahead.
I just had one question. Can you circle down how much was the unit sold in coolers in this year as a whole?
207,000 is coolers were sold.
Sorry?
211,000.
211,000.
207,000.
Okay, sorry. And just one small thing, if I may, is there any sort of expenses, or I don't know if losses would be the right term, for this Arçelik JV should one build in for, let's say, FY19?
You do understand that it is an equal JV, 50-50, right? So the turnover and the profitability of that is not aligned line by line into our P&L. It comes in as a separate line. So if you look at go down the press release, you will find that there is a share which is down below after the PBT, which represents the consolidation of the various companies where we have joint venture partnerships but do not have effective control. The percentage of that is consolidated in there. So 50% of whatever has been spent in terms of expenditure or whatever is gained in terms of profitability will be allocated to that line and will add on to the overall profits of Voltas.
I'm just trying to understand, let's say for F19, is there a number which, at till certain level of expenses or till certain level of losses, you would be fine?
We don't give forward estimates on any of those, just as we don't do it for our businesses. We would not want to comment on it as far as Voltas is concerned. But you need to be rest assured that we will manage the business in a manner that the overall profitability of the company, together with its joint ventures and subsidiaries, are well protected.
Okay, great. Thanks and all the best.
Thank you. The next question is from the line of Harsh Piani from SBI Mutual Fund. Please go ahead. Hello?
Yes, go ahead.
Yeah, hi, good evening, sir. Can we get the primary sales number for the full year and the industry number too?
Harsh, we've always been discussing continuously on secondary shares, secondary markets. So how does primary help?
because you report primary sales in your P&L.
So finally at the end of the day, whether it is market share or whether it is anything is all dependent on secondary sales.
I am unsure whether historically we have been giving primary sales or secondary sales. I was presuming that we were sharing primary earlier, and which is why I'm trying to understand this.
No, whenever we talk about market share or anything, it is always because market share is not what I claim the market share to be. Market share is what a reputed third-party organization determines on the basis of a survey of various selling points across the length and breadth of this country. And that's what we have been quoting always as market share. In terms of our primary sales itself, if you really look at the change vis-a-vis last year's number or vis-a-vis the last quarter's number of what we have done, you will get an indication of the total primary sales in terms of value. We would not want to dissect it separately into what is volume and what is price and all of those things. Those are our business advantages which we would like to keep close to our heart.
Sure, sir. Okay, fair enough. And secondly, if you look at the last few years, your cash balance is extremely high. Now, your dividend payout is about 20% odd, which has been there for several years now. How do we understand the capital allocation better? Is it something that you've been preparing for some acquisition and you got some opportunities, finally it could not conclude? Or so essentially, if you can just elaborate a little more on the capital allocation. This is fairly large amount which has been there for multiple years. That would be really helpful. Thanks.
Like in any other company, from time to time, we look at all our resources, including our cash resources. One of the ways of utilizing this cash sensibly has been in getting into this joint venture, and we have just embarked on that process. We have already invested some amount of money into buying land at Gujarat, as Abhijit had mentioned in his write-up, and there will be more expenses to follow. You can be rest assured that the Voltas JV is not going to turn profitable from year one. There are going to be marketing investments that need to be done, and after that you will find an L-shaped kind of growth, both in terms of our own the consumer durable sales as well as the profitability that accrues therefrom. So that's one part of it. Right now, we do from time to time look at possible targets for acquisitions, for expansion, both organic, inorganic, etc. But we are equally conscious about the fact that we don't want to be driven by the fact that we have cash on our balance sheet into buying something that might not be long-term, cash accretive or long-term profit accretive. Our consistent motto has been profitable, sustainable growth. So please be assured that we are not going to be continuing to keep this cash just unutilized over a longer period of time, but at the right time, we will make the right moves and create further value for our stakeholders.
And if I may just ask, which areas would interest you apart from your core business where air conditioning you require a little capital, maybe you will start investing a little more. The Voltas Beko you are investing, but again you have very large cash balance, you are throwing a huge amount of free cash flow every year. So is there any particular area or couple of areas where you're looking at where potential opportunities would arise and maybe you would want to kind of evaluate? That would be really very helpful, sir. Thanks so much.
Look, we don't believe in going out into something that is totally unconnected from our business line, because we have a certain understanding of the business that we are currently doing, and we have a certain capability in running those businesses appropriately well. As you might have observed, we have over a period now, I think from about the first quarter of 2015-16, we have been consistently moving our needle up on the project business. Today we are happy to say that for the full year we have a margin of about 6 to 7%. So now that gives us a certain amount of confidence to invest more sensibly into certain lines like that. I'm just giving that as an example. Similarly, there are a number of other things that we are doing within the confines of our business which we can do better. And I don't want to be talking about each of those things. For example, a certain amount of sensible market investment at the right time can propel our brand value as well as our sales much, much better. So these are options that, I don't think I am in a position to discuss in great detail, but please be assured, as we have been showing you improved profitability year after year, quarter after quarter, please be assured that your investments are safe and are being dealt with in the most elegant and appropriate manner.
See, Harsh, in the immediate future, the first thing which is going to happen is the funding for the JV, where already 650 crore commitment has been made by both the partners.
Right. Thanks so much. Much appreciated. Thanks.
Thank you. The next question is from the line of Charanjit Singh from B&K Securities. Please go ahead.
Hello, sir. Thanks for the opportunity. Hello?
Yes, go ahead.
Yeah. Sir, actually, I would like to understand, there has been a significant increase in the raw material prices of late, but our gross margin levels, we have been able to kind of maintain the similar levels on a YOY basis. So how do you see that we have been able to, pass on certain price hikes, or how do you see that going forward? Also, maybe the inventories are at a lower price and we can see the impact going forward in Q2 onwards. Can you comment on that, please?
I think there are a number of factors that one needs to look at when you look at the impact of commodity price increases. One is that we had, in many cases, we had older price contracts with vendors, particularly our overseas vendors, which ran till quarter 3, quarter 4 in many cases, where these are contracts which are, in some cases, negotiated for the entire season. There was also older stock that was available with us, particularly since, if you recall and go back 3 quarters, quarter 1 we had a shortfall in primary sales or low primary sales, primarily because of GST-related impact, where our vendors and distributors did not pick up stock in what has historically been a good month for sales. Post the GST, we had also had a benefit of some input cost credits which were not available to us in the pre-GST era. And if you also say that our revenues, and I think this was the point made by both Utsav and Mr. George earlier, that our revenues for 17-18 and for 16-17 are not strictly comparable since our turnover is lower post-GST. So if you add up all of these factors, that is the reason why you are seeing this level of margin. In addition to that, I think we have also been very conscious of, as I think Mr. George mentioned, of sustainable, profitable growth. So in addition to that, anticipating that will be impact of commodity price hikes, we have also been very diligently working on value engineering initiatives, cost reduction initiatives, in order to try and protect our margins to some extent. So it's a combination of many of these factors that has led to this.
So, sir, do you think, when do these, price contracts, they will come up for, renegotiation, and do you think that there could be, certain price hikes which could be passed on by the suppliers? Because based on our discussions with, some of the largest compressor manufacturers, the Chinese market has been growing very significantly, and they have, been raising prices on the compressor side.
I think that's a very good question. Actually, what's happening in the Chinese market and elsewhere is you are aware of what's happening on the commodities, you're aware of what is happening on the foreign exchange, etc. So there is a certain point up to which we can absorb the cost. There is a certain point up to which we can, balance it out with cost efficiency programs that can be internally done. Post that, I think there will come a point when we will need to take some kind of price increases. But that does not again mean that we will take a price increase across the border all over. We will selectively increase the prices if it need be to protect our margins. But as a market leader, we are quite conscious of our role, and we would like to see how best we can really balance the whole thing out. At the end of the day, the truth is that we must protect our margins and we must grow our volumes. So it is a little bit of a balancing act between both of this. But you're right that the input costs are going up, and we might come to a point where we might really think that we might need to do something in terms of the price increase. But it is too premature right now to say that I have a closed mind and I'm going to be taking a price increase straight away right now.
Mm-hmm. And so the last question from my side is that April month has been quite weak in the northern market. So what's the kind of inventory levels which will be sitting on, and if the season doesn't pan out, so how do you think the inventory levels can lead to maybe some pricing cuts, significant discounting by the vendors?
I think it is too, as I've said in response to an earlier question, it is probably too early to talk about how the season will pan out, because we are right now sitting in mid-May and we still have about a month and a half of the season or a little longer in terms of the main markets and that is in North India. So I would say it is too early to talk about how the season will pan out and therefore what impact it will have on the inventory levels in the channel.
Okay, sir. Fine, sir. Thanks a lot for taking my questions.
Thank you.
Thank you. The next question is from the line of Srinidhi Karlekar from HSBC. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, I just wanted to understand the FY18 comparable revenue, if it is possible, because it seems secondary volumes are grown by 15%. I'm presuming the primary could be close, a number which is close to that. There was a mixed benefit, I guess. So would it be possible to share what was the comparable revenue for the full year 18 in the AC segment?
If you want to strictly take it on a comparable basis, the revenue for FY17-18 was lower by about 250 to 300 crores as compared to the same period last year.
This is for the AC segment, right?
Yeah. It is only the AC segment. Yes.
Okay, fair enough. Yeah, thanks. And sir, if you see our segment profit in this UCP segment, it has grown by something like 8% for the full year, which is a bit lower than what the secondary sales we did, like 15%. So it seems like the underlying margins have gone down, but it looks like comparable because the denominator is understated because of this accounting changes, and we have a inverter AC mix which is benefiting us. So would it be? So I just want to understand that, is that understanding correct, that the underlying margins are down a bit?
No. The underlying margins, if you really look at, is around 13.7% basis of the 3,500 number that Utsav just spoke to you about. Yeah.
Right.
But it is within. It is just to remind you that it is the highest in the industry, and it has been consistently maintained within the range that we have been promising to the market.
Fair enough, sir. That answers my question, and all the very best for the future.
Thank you.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, good evening. Just a small clarification I wanted. You said that the market share, we have not lost any market share in the year as well as in the Q4, and we have grown on a like-to-like basis about 7% in the cooling product versus the industry growth of 11%. Is that correct?
So I'm not sure the 7 and 11 numbers.
Where did you get that from?
As far as secondary sales are concerned, for the year 17-18, industry has grown by 11% and Voltas has grown by 14.8%. This is for the year 17-18. Secondary.
Full year.
Thank you, Mr. Bakshi. Thanks a lot for this. Just one last question. I know we've been talking on the April has been bad and still 1.5 months to go. What sort of weakness you have seen? I don't want a number on a Y&Y basis, but is it something, a very sharp decline we have seen in 1.5 months' time, or you think that if 20-25 days becomes recoverable, we are still on a track of a 15% or a 20% industry growth? That's my question. Thank you.
I think there is one, I don't want to get into the numbers and how much of shortfall we have seen, but I want to answer this more from really the buying behavior of the buyer. I think there are many studies to indicate that what really drives the buyer to the market is really one hot weekend. So it's really, sometimes very true that one suddenly sees a spurt in secondary sales driven by a very hot weekend, and that drives buyers to the showrooms. So this industry is very weather dependent. So we are, whatever has been the effect in the first, in the month of April, and probably in the first 10 days of May, we need to watch out as to how the weather will pan out over the next few weeks and over the next few days.
All right. Thank you.
Thank you. The next question is from the line of Venkatesh B. from Citi. Please go ahead.
Sir, is it possible for you to share what exactly is the total equity investments that are required on behalf of Voltas into the Beko JV? What is the exact amount? How much has already been invested and how much more needs to be done?
I think we have said that the total investment would be about $100 million, which will be shared equally between the two partners.
That's the initial investment.
That's the initial investment.
And apart from that, on a year-to-year, we have a 5-year plan on the investments that we plan to make jointly as partners into Voltbek in order to achieve a certain kind of market share in the consumer durable businesses. I'm sorry that I cannot share those numbers with you because those would be our exclusive, business strategy and direction.
So this, your share comes to $50 million, correct?
Yeah. So that's only for the initial investment. There is obviously you cannot just run a business with initial investments. When you launch, you will need marketing spend. Once you do that, after that, you will need to be adding on numbers. There's a whole lot of, you're starting practically a new business. Although we are sitting on a huge advantage of the fact that we do have a distribution setup. But there will be a number of other things that will be required in terms of making sure that this business starts off well and continues to retain its power forward as we would like it to.
Okay. Sir, the second question is on the electromechanical business side. Your fourth quarter margins were 7.6% and your full year margins were 6.5%. What do we take as likely going forward? I mean, can we assume this is going to be at 7.6% next year onwards?
I think we have always said that we do not give forward guidance. That's, I think, number one. And I think secondly, I think we have also said in the past that particularly in the project business, it would not be right to look at one quarter's margin. I think this tends to be influenced by a variety of factors. As we have said in the past, the stage of the project, the stage of completion, starting of new work, completion of old work, etc. So I think we have said that what you have seen in the last few quarters has been a gradual improvement in the margins, which is a result of the conscious initiatives that we have put into place, both in terms of execution of our projects and in terms of selection of our projects.
Okay.
Having said that, I would just add to what Abhijit has said, that time and again we have spoken about a number of legacy projects that we were burdened with. Now, all of those legacy projects, there are one or two things which are totally not within our direct control, such as Sidra, which is an issue between the main contractor and the client. So that keeping that apart, most of the legacy issues we have cleared that out. And I can say with a certain amount of confidence that the quality of our order book represents the promise of good profitability as we go along. But project businesses being what they are will have its ups and downs as we go ahead. But we expect to be able to manage it to return a decent amount of profitability. And as I have mentioned earlier in my con calls, we are really looking at on a long-term basis. If I can't make at least 8% in terms of a return on this thing, then there is no reason why I should be in this business.
Sir, pardon me for asking this question again. I did mention about the UCP business. Now, I just didn't understand this part that actually the reported margins are 14.7%, but actually the underlying margins are 13.7%. If you adjust for GST, you mentioned something like that.
Yes, sir. It's correct, because the turnover for last year is inclusive of the taxes, whereas this year we strip out the taxes once we have come to the GST regime.
The way that the turnover is accounted, pre-GST was including certain taxes in the top line. Post-GST, those have been stripped out. So comparable is that we actually have something like about 3,530 crores as the turnover of segment C. And so if you apply that on a like-to-like basis to compare it with the previous time, against the reported number of 14 point whatever, we will now be, it will actually be 13.7. That is the...
13.
Okay. Sir, and lastly, this, I went back and saw the numbers which you have given in your press releases in the past. First quarter, you had mentioned your market share was 22.2%. Second quarter, you mentioned it as 23%. Third quarter, you mentioned it at 23.7%. Now, your full year press release says it's 22%. So it seems like there has been some amount of market share loss in the fourth quarter. So what exactly has been this reason for the, it's not like a major loss, but yes, there has been, you have ceded around some amount of share in the fourth quarter. What could be the reason? Have you been very surprised by the pace at which inverter AC sales have picked up in the fourth quarter, and maybe you were not as well prepared as everybody else? That is why you have lost market share. Could you throw a little more light?
Market share, I'm not very sure about that. See, the third party research that is being done to establish the market shares always has a certain degree of up and down. So it is not as if that is the complete, in terms of, it gives you a range. So a certain amount of range in terms of what we see, whether it is the month-end figure that you're looking at or it is the quarter-end figure, this is the average for the full year. This is the average for the full year as opposed to what we might have reported and said that in March we have or in September we have hit a market share of 23.7. You can't just average it out that way.
Okay. Thank you very much, sir. Thank you. And all the very best.
Clarifies your question.
Thank you. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
So thanks a lot for taking my question. Actually, most of my questions are answered. A couple of bookkeeping questions. Firstly, out of the total order book, what would be the order book for Rohini today?
Rohini basically, does rural electrification projects. So about 40% of the domestic order book is of rural electrification.
About 40%. And so secondly, would it be fair for us to assume that a large part of this improvement that we've seen in margins for segment 1 is because of the significant turnaround in Rohini that we've seen?
I think it's a combination of Rohini plus improvement in projects in international business that I think Mr. George answered in response to an earlier question, as well as some of the impact of, in the past, we might have had some impact of some legacy projects and the provisioning that was required on that, as well as improvement in some of inefficient execution in some of the other domestic projects. So it is not attributable to only one factor.
Sure, sir. And sir, lastly, if you could share what is the total amount of spend on advertisement and sales promotion for the year?
The advertising expense for the year is of the order of about 70 crores.
That's only advertisement, not marketing spend.
Sure. Thanks a lot.
Thank you. The next question is from the line of Bhumika Nair from IDFC Securities. Please go ahead.
Yes, sir. Just wanted to know in the fourth quarter, what would have been the industry growth versus our growth of about 6 to 7%?
Fourth quarter industry grew at 5.2%.
Okay. And just to clarify, you said that the industry has moved towards 40% inverter, and for average for the full year for us, it was about 20%. What would it have been for particularly for 4Q inverter sales as a percentage of total?
Close to 30%.
Okay, okay. So the other thing was just wanted to understand, channel inventory had gone down post GST and perhaps would have gone up again, in the third quarter prior to the table rating. How was it at the end of the year versus, what it is on a YOY basis?
The channel inventory, because generally the inventory with the stockist and the distributors a little higher this year because everyone has been stocking up in anticipation of a great summer. So it's not really gone out much in terms of secondary sales because the sales that you're seeing in both the months of April and May has been far below the general industry expectation because of the inclement weather. So the inventory in the channel is likely to be a little high. But let's wait. The summer is not fully over yet. We are not. So there are a number of days that can make a difference, and also there is a second summer that comes in later, as you know. So it's a little too early to call it and say that the inventory is stuck so much in this thing there will be no further sales, etc. No, we don't come to those kind of dim conclusions. We wait with the hope and anticipation that things will be better.
Okay, okay. And lastly, just want to check, how have price hikes happened in the industry? Both have we taken any price hikes and have other peers also taken any price hikes over the last 2 to 3 months? If you can just comment about that.
I think we have not taken any across-the-board price increases, but there have been certain price adjustments. Particularly, these adjustments have been a result of the change in the star ratings in fixed speed, as well as some price adjustments in certain categories of inverter ACs.
Okay, okay. Great, sir. Thank you very much and wish you all the best.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
So thank you everyone. Thank you for participating in this conference call for the year-end results. And once again, our apologies on behalf of the management for having to change the time of the call from 4 p.m. to 5 p.m.